Hello, everyone. GM. Welcome to another episode of the Solfate podcast, where we talk with founders and builders normally in the Solana ecosystem. Had another great episode, another great podcast this week.
Such a good one.
I think Arnold might be one of my favorite people in the Solana ecosystem.
You're not allowed to say that, Nick.
I can't steal your thing.
That's my phrase.
Okay.
I'm just.
What do we talk about this episode, James?
Arnold.
So
first of all, Arnold is great, right? So Arnold is founder of Sphere, right? Sphere Payments, doing great things in the payment space. Like super excited. I think they're basically trying to be like the Stripe of crypto, which is freaking sick. Also, cool. Arnold is just a really cool guy. Nick reminded me that when Nick and I first met, Arnold was present as well. We met at Breakpoint.
Same exact conversation. All three of us met.
Apparently all three of us were like huddled together at the Hacker House. I'm not going to lie. I don't remember Arnold being there, but I trust Nick. And I had a great conversation with Arnold. Hopefully it was great at Breakpoint, but fuck, man. I just have a bad memory. It's nothing personal. Arnold is great though. This conversation was like almost very philosophical, wouldn't you say, Nick? Like we got into
some philosophizing.
Just like the why crypto, and Arnold, I think, has some really sort of strong opinions about the importance of crypto for like the evolution of humanity, almost in terms of just like being I don't know, like having liberty and freedom and that sort of thing. So it was really dope. We definitely also talked about Sphere and what they're doing. So I think it's a good one to check out.
Yeah, absolutely. And before we actually get into the episode, give a huge shout out for Phantom. Phantom's the preferred wallet of the Solfate ecosystem. And, you're probably using Phantom. Keep using them. They're great. And also shout out for the Unlayered podcast. Like if you're hungry for more Solana content, check out the Unlayered podcast. They're a leading crypto podcast with one of the most balanced views on next-gen ecosystems. They've been some of the first people to talk about some of the, things like the points meta, Monad, MetaDAO, all sorts of those cool things. And give them a listen. Search for Unlayered podcast on Spotify or Apple and on YouTube.
And while we're talking about, YouTube, Spotify, Apple Podcasts, that kind of thing, we'd love for you guys to leave us a review on your favorite podcast app. We're trying to get the word out there a little bit more. We love doing this show, and your support is greatly appreciated.
I love feedback.
Feedback is also great. With that, let's dig into the show.
Let's go. Nothing in this podcast is or should be considered financial advice. Any opinions and thoughts expressed are solely those of the individual. They do not represent the opinions of any entity. Enjoy.
So, hello, Arnold. You want to give us a little introduction to who you are, what is Sphere, and then we'll just let this conversation take us for a wild ride.
Sure. It sounds terrific. I will try to keep it TLDR, so we don't go into too much of the day to day. But my name's Arnold. I was born and raised basically around Boston, Lincoln, Massachusetts, for those who know. The way that I usually like to start is in 2009 because it's the most relevant to crypto. I have increasingly discovered that not to Putin anyone, and I'll probably do that a lot at some points, especially for the Zanier stuff. Looking back, it makes a lot of sense why we're building crypto payments. At the time, just normal Boston upbringing, and maybe the main difference is that my parents come from Korea. And even back then, most people didn't really know what that was. They're like, "Are you from the North?" I'm like, "No, I don't think so." But
oh my goodness.
There's some context clues that I'll elaborate on later. But just throwing that out as sort of the base. 2009, Boston Middle School. This is a story that I've mentioned a few times. Was super into games. World of Warcraft, wanted to play so badly, and my parents refused to pay for subscriptions. Didn't really have a great computer. Because we're immigrants and they came to this country without a lot of money, we're pretty poor. And the way that I can get World of Warcraft access is if I fill out these online surveys, 45 minutes there, 45 minutes back every day. And you tell people how many times you drive your Nissan. I'm 13, I think. How many times you like exercise per week. And at the end of it, you get a couple of Bitcoin. This weird magic internet money. Don't need a bank account for. I figure that I'm too young to even have one. Don't want to ask my parents because it's World of Warcraft. But do this for a few months, and you can trade it in basically for a $15 gift card. You can get paid out in PayPal, or you can order a gift card. And looking back, took way too much time. I think at the end, I was just like clicking random buttons and just like scrolling to the end to claim my coins. But it reminds me a lot of the magic of crypto, even a few years ago, and when Solana was sort of starting. You have like all these different like names and like animal like profile pics. No one really knows who the real life identities of people are, and that's almost a feature, not a bug. There's so much excitement, and I feel like the internet changed from that like 2000s period to 2010s and increasingly to now, where like more and more people are using it. And I promise there's a reason why I'm mentioning this. So let's fast forward. Like people use Silk Road to buy like fake IDs, LSD. Maybe don't put that in the podcast. We get to like Ethereum, and really cool idea, decentralized computer. But it's cool in the sense that like group theory is cool, or like big data AI is cool. It's a decentralized computer, great. And that's appealing to me and my co-founder, who at the time is my best friend from college. He's, I think, 17 and I'm around 18, 19. And we bond because we're going to school in New York. It's a very like fancy school. And like, we're both from lower income backgrounds. And so we just can't really fit in. Like we don't know what going to like a club is like partying is just like kind of crazy to us. It's like, wait, really? Like you're going to spend all this money for college, but then spend a lot of that time just like having fun. That's crazy to us. And so that like inability to sort of fit in, that shared history, even though he's from Guyana and the Caribbean, is what bonds us. And Ethereum is interesting enough to invest into. We do flip it for a little bit too, like, we definitely don't sell the top. But the increasing price for many of our friends, our circles, was sort of the talk of the town. ICO season rolls around. There's still no use cases. There's no DeFi. Things like Open Zeppelin, Solidity, learning how to use this stuff is not very well defined. It's not until we see Tether, which we can explain to our friends, our families back home, that's when we have like that aha moment. Like this actually makes sense. If you get rid of the blockchain, it's just $1 on the internet. And that's very interesting to us because, reference to the beginning part, if my dad had the ability to bring his won over from Korea to America, my life would have looked a lot different. And same for my co-founders, because he's traveling from like Guyana to St. Lucia, BVI to Bahamas. And, although it's interesting, we don't get into we're going to work in blockchain until much later. I go into IoT engineering. He goes into, I'll call it like TradFi, and eventually more into like the fintech space, asset managers. And we're both figuring out what to do during COVID. It's very lonely. We realize that the corporate culture is kind of like sucks, especially for us, because again, we're not very socialized. Like, you work and then you hang out with your coworkers, you guys get drinks, you guys talk about like movies, I don't know, celebrities, whatever the gossip is. Maybe there's like a common hobby for everyone. That part is tough for us. And so instead we continue to hack on software. Side projects starts off with us just trying to like build things that are useful to us, or ways to like organize your class schedule, and it just percolates. We come across Solana because there's a long rabbit hole that includes Charles Hoskinson and like YouTube. And it's really fast and really cheap. And I think like many in Solana, that's sort of the aha moment. Maybe this is the time for blockchain to scale to a lot of people. We spend, a year or two just like tinkering as anons. We buy some NFTs, we flip them. We just realize that, there's also opportunities to like basically arb on dexes. Jupiter isn't really a thing until October of 21. And, we see it come out, we're kicking ourselves, like, why didn't we just do that? We could have productized that. A lot less sophisticated, of course. But, after building a lot of like data analytics, like tools that help us trade and trying to sell it and realizing that no one wants to buy it, partially because it's still, an early product and partially because we're not very active in the Solana ecosystem, we come to the realization that, we're rewriting the same payment service over and over again. Maybe like, how hard could it be? And this whole time we're waiting for Stripe to just add support for Solana. Like when Solana, Coinbase Commerce, when Solana. It doesn't happen. And so we decided to just like YOLO submit it to the summer hackathon. It's sort of our, farewell to blockchain. I'm going to go to grad school. Luigi's going to go work. Eventually it ends up at Drift, but basically at first exiting the industry. At the time, we predicted that we would have less than a 5% shot of getting an honorable mention. We had seen, other protocols. We figured, it's probably just us who has this problem. You could just pay with credit card. Why do you even need to pay in USDC? A month later, we end up winning. And this is the first time we feel pull from the market. I actually remember your submission back then, James, because I remember seeing your video about Ironforge and being like, wow, like this would have been very useful for us. And, the company goes through a lot of iterations from that point. Part of it is informed by the conditions. Turns out during a bear market, like no one wants to pay in crypto because no one's holding crypto.
Shocker.
I wanted to pay in crypto still.
It starts off as like a Shopify style thing and then like a Stripe-like thing. I'd say like the pivotal moment, without, again, hopefully going into too much rambling, is after we're able to raise money. We go back home and our parents, our extended family, they're shocked that we are no longer unemployed and that there's like a path for us to have like a salary and like maybe this goes somewhere, this effort. One of Luigi's family members starts mentioning Tether. That's super weird because this is an older guy, like, he knows about Bitcoin and Doge. And when you start hearing things like Tether and like Tron from this person, a light bulb goes off. There's a lot of little coincidences like this. Sketchy landing page. There's one YouTube interview of me on the internet, 500 views. Yet somehow people find our Calendly and ask us for stablecoin support. And the most exciting part is that they're not from crypto Twitter. They would never go to Breakpoint or ETH Denver. They are, running a family business somewhere in the Americas. We increasingly noticed in the Caribbean and Latin America. And they just want like a convenient entry point in using stables as a point of transfer, to move out of local fiat. A lot of the ancillary things that as natives we take for granted, adding a URL to your MetaMask. Turns out to be really hard, especially if you don't realize that it needs a slash at the end, or if you are copying and pasting an address and you realize that you never actually copied it and it's a different address. And so money goes to the wrong destination. That's the second half of the company, and I'm sure we'll get into the details, but that's sort of like the TL, hopefully not too TL, road. You know what I'm trying to say. DR of how we go.
Dude, first of all,
yeah, that was great.
What a story! Like, I was riveted the whole time. I love how you told it in the present tense. I felt like I was there, like sitting on your shoulder, watching things happen.
I felt like I was there because like the first half of your story is exactly my same upbringing, aside from the immigrant. Everything else, like trying to do these, like trying to get internet money to do random things, low income background, can't afford anything. There's just like so many like random struggles. You're like, I found internet money. I found these weird sketchy forms that I'm filling out and I can get like some Bitcoin or in my case, it wasn't Bitcoin. I didn't actually never saw a single one that would actually give you Bitcoin. But doing like random internet things to try to get internet money to do things as like a teenager, because couldn't afford anything else. Like, oh, that resonates so much with me. Oh my goodness.
Who doesn't wish that they just kept a couple Bitcoin from filling out a random form in 2009?
Ooh,
like,
that's the question. Did you keep any of that Bitcoin, Arnold?
I kept a couple, but I ended up spending it in that, maybe not included in the interview, but on Silk Road. I ordered a lot of things.
Buying legal things, of course.
Only legal things.
I think I might have like 0.5 left in some wallet somewhere, but like if you remember that time, like the wallets weren't like these Chrome extensions. It was just like this block of PGP, and like you copy and pasted a bit of it into like this honeypot mixer thing. So yeah,
I was not involved in crypto at that point. This is all beyond me.
I remember setting up a CPU miner on my laptop back in the day. Mined some amount. I don't remember how much. It ran for a while, and I was like, "Oh, this is worth like $5." And my computer ran for like my laptop ran for like a month. It was like a 5-year-old laptop too, and I'm like, "This is cool. This isn't worth anything." Great. Forgot all about it, and then Bitcoin happened, and like, well, this is unfortunate.
Yeah, I try not to think about the old days because, there's a lot of FOMO. Even outside of crypto, I wish if you just looked at CUDA in like 2009, wow, that would have been such a key insight. Put a little money into NVIDIA, hindsight.
Hindsight's always 2020.
Yep.
Hindsight might be 10/10.
It's really, hindsight's really good. It's almost like having a crystal ball. Oh wait, dude. So tell me, let's talk about Sphere now. Let's talk about the product now. The history was awesome. By the way, I didn't mention this, but like I love the way you talk about your co-founder, right? Like, and you guys just like being in this for so long, right? Like I love that it's not just a business relationship. It's like we understand each other. We have history together. We can go through thick and thin together because like we're just best buds. I think that's awesome.
I agreed with him when we started because he's more the fintech guy, and I just know that he's a genius, and so like I want to build with him. And especially in the early days with no money, framing was, listen, we have like 20 years before we're probably too old to realistically do this a lot. So, even if this one doesn't work, we'll just do the next one. The key is that our relationship gets better because we know each other from like a friend's school setting, but work setting is a little bit newer. I tell this internally too. Like that's sort of the point, I think. The relationship is, especially now looking back, so hard to replicate. Twitter even being like a model of that, like so much of the information that we're consuming is just from being present there. It's very grateful.
That's sick. Let's talk about the product now. So, what I guess, why should somebody use Sphere today? What does it offer in terms of, use case that should make me dive in?
So what's interesting is that what is the most pertinent to people who are familiar with crypto? We built during the first half. Most of what you see on like Twitter, on our website, this is stuff that we built a long time ago. All the gateway style products, the checkout, subscriptions, extensions of like the on-chain payments, support for, multiple virtual machines, being able to have that universal settlement. That was the first half. We realized that it's very cyclic, so no one wants to use it when times are bad. Today, there's a lot that we're cooking on. I'd say that the super duper high level is on and off ramp. But there's a lot that goes into on and off ramp. There's banking breakdowns by region, currency support, how the business model operates, like even how you handle KYC and onboarding new users. I'd say the main reason to look into Sphere, if you're more interested in the gateway stuff, that it exists. And part of the benefit of how we sort of pathed it is it's mostly self-serve, and it's the front end that you don't have to build yourself. You get webhooks that you don't have to build yourself. For the recent stuff, it's if you are an individual, more likely an entity, a business entity that needs to move size, especially across borders. Because there are a lot of great filters, and I'm sure we'll get into it, whether you're looking at the US or outside of the US. And yeah, over especially the last maybe 8-ish months, we've been spending a lot of time on like the compliance side, anything from money transmission to identification, to sort of like the less well-known things that are intentionally opaque. Correspondent banking is probably the biggest culprit. So to maybe rephrase your question a little bit, when people ask me what problem we're solving, it is the correspondent bank middleware. You can never fully get rid of it, but there are just so many horror stories when you think about how bank settlement works right now.
Would you mind elaborating on that a little bit? I'm sure there are
what
plenty
is
of
correspondent bank?
I was going to say there's probably plenty of people who, like me, are ignorant of some of this. So maybe definition of correspondent bank and some of those horror stories. Maybe an example or two, if you wouldn't mind.
Of course. So I'll give the literal definition first, and then I'll provide a little context. A correspondent is simply a bigger bank that has functions that you as a smaller bank don't have access to. Usually it's for legal reasons. The ability to support dollars, for example, is very much controlled by the US and its banks. History of banks that's relevant here. High level comment is all this stuff is very new. Like you can definitely tell that governments, nation states were building the plane as they were flying it. Because even the mandate to have like digital versions of paper checks, that's all in our lifetime, 2003. That's after 9/11. Before, you have all this tech debt of needing to support everything from informal bank settlement to paper checks, and you're getting a lot of paper checks. And there's this whole transition process from smaller banks needing to borrow the resources of bigger banks. That component still exists today. It's a little bit more pernicious though. Whereas in the old days, travel between A to B was a lot more restrictive. Now, you can kind of fly anywhere in the world and data can transport from anywhere in the world. But we still have this correspondent model where you have the central bank at the top. It is the source of truth, the ultimate nostro vostro, which just means us, you all. And underneath the central bank are a bunch of big banks. Underneath them are a bunch of bigger but not as big banks. And it just percolates all the way down until you get to, a local credit union or a community bank. And the function is to share peer-to-peer bank ledgers that ultimately percolate up to the central bank. And when you're doing an international transfer, the central banks are communicating with each other. So they have their own sort of like peer-to-peer ledger, which sounds like inefficient just because there's so many, right? Like maybe there should be a single source of truth. The more pernicious part, though, is what happens sort of like under the table, because there's no transparency. When I send you a Swift wire, I can give you the Swift MT103, which includes like the message. But where exactly that Swift payment exists in the pipeline, no one knows, not even Swift. There are no webhooks. It's hopping from correspondent to correspondent, and they again share peer-to-peer ledgers, but they don't have somewhere to report everything to.
Some sort of decentralized ledger system that everyone can look at and track the status of value transfer and moving of assets. Interesting concept. Who's building this?
It's fascinating because there are a lot of little things as a bank in this pipeline you can do to make more money. You can force unnecessary FX conversion. So maybe Nick sends me dollars. I just, am required to convert it into euros. And then the recipient wants dollars. So before I send it out to the next bank in the line, I'm going to convert it back. Take a little spread on each conversion. Maybe I get the wire at like 4 p.m. And it's 4. I got to like manually transcribe this onto another computer. It's almost 5. And if we keep this deposit overnight, we'll collect the fee on that yield. So, who's to stop me from, maybe it takes more than an hour. Who's to say? And so these things slow down and there's no transparency or accountability as the correspondents need to process the Swift payment. It's very scary at size because if you're moving like $10 million and you have the IMAD, you have the OMAD, but you have no clue where the money is at a given point, what are you going to tell your client who you're moving that money to? I promise it'll be there. I don't know where it is, but I promise it'll get there.
We sent it. It'll be there. I promise. You're like, did you just steal my $10 million?
There's so much trust baked in, whether it's within the system to deliver the payment or within the system itself not to rug you on fees. And blockchain is so good at that trust removal. And I'm sure we'll get into the weeds. It's not as simple, though, as hosting this all on Solana because there are a lot of regulatory reasons why you wouldn't want it to be on Solana or any general purpose permissionless ledger. It is a necessary component, but for a bank, there's a lot of risk involved.
Do you personally? It sounds like you personally have a very pragmatic approach where like you just said it. It's not like we want to wholesale replace the entire system. We just want this to be an additional component that makes the system better. Is that's the vibe I'm getting? Is that accurate?
Yes, because it is very unrealistic to replace the whole system, especially when that system has existential reasons to remove threats. There's probably a limit to what I can say here, but trying to get rid of the lifeblood of a nation state, and that nation state perceives itself as a necessary thing to make sure that there is no chaos, violence, etc. It becomes rational to take steps to remove threats, and we've seen in history attempts to deal with components of the nation state. A popular example is probably like Ubers and the taxi industry or Airbnb and hotels. So it is possible to sort of fiat, friendliness or coexistence with the existing system. The way that disruption happens, though, it can't be this philosophical stance which seeks to completely get rid of what existed before. The rare instances where that occurs usually carries out because it is physically impossible to get rid of. Prohibition is a historic example. A technology example maybe would be torrenting. You just can't really get rid of it. Bitcoin, maybe they tried to get rid of. But yes, I see where the let's replace it all comes from. I just think looking at history, it's probably not going to happen. And at worst, you create adversaries who realistically can actually shut you down. If
absolutely.
The government tells AWS to take off all of Lido's nodes, GG. There's no, it's going to be really hard to rebootstrap. Yes.
Yeah. I I very much agree with you. I appreciate sort of the philosophical vantage point there, where it's like, hey, just looking at this logically, there is reason for us to coexist just from a power dynamic standpoint. I also am inclined to think that there may be some genuine benefits of having this trust based system in certain situations. One of the things I love about blockchain is that it allows the optionality so that you can go through either or a combination of the two. Do either of you know Patrick McKenzie? He's like he used to be at Stripe. I think he's still like an advisor at Stripe, but he's fairly well known on Twitter, and I freaking love his tweets. But
I know this guy.
Now that I'm like talking about it, you'll know him, but he talks a lot about sort of like the operations that go into certain things and how challenging certain things actually are. People will like complain about airlines, for example, and he's like, hey, actually, let me talk about like how crazy of a logistics machine this is. And I love what he talks about, but one of the things that he's mentioned with regards to payments and banking is he's like, you would be shocked how often people fat finger a transfer. And because it's a trust-based system, you can just call up the bank and like tell them, and they will give you back millions of dollars. Like one bank will have over transferred millions of dollars and the other bank will be like, oh yeah, happens all the time. Here, have it back. And you can't, at least not today, do that with blockchain. You fat finger a transfer and it's like, too bad, right? Transfer it to the wrong address, an address that no one has the secret key for. Too bad, So it's like there are reasons for both. I think the key is kind of, you alluded to this earlier, is that most people don't know about sort of the hidden fees associated with this correspondent banking system that you're talking about. And
or
so
even, not even just
for
the fees, but also the process of how it works and all of the things that's involved with it.
Yeah. And so maybe for most of us,
have no idea.
Totally. And so maybe for most of us, that's not the right move most of the time, right? You're doing a big transfer because you're putting a down payment on a house. Maybe you want to go through some trusted entities to make sure that there's some safeguards in place and you don't accidentally send all your money, right? Like everything you've saved up for a house to an address that nobody has access to on accident, right? Like that feels like, okay, maybe I'm willing to pay the extra fees and stuff associated with that. Whereas, I'm just like sending money back and forth between friends or, maybe decent sized transactions, but not massive transactions, but they're to known entities where there's very little risk of me fat fingering this. It's like I'm sending it to a .sol address or something. It's like, yeah, it makes a lot more sense for that payment, I think, to be on a far lower fee environment where there isn't a middleman who's trying to sort of take advantage of, I'll keep this overnight and I'll get a little bit of extra fees on it. Everyone's trying to skim some off the top in a trusted system, and I can't blame them, right? Like that is the natural incentive here. But if we can use technology to remove that incentive and remove that middleman where it makes sense, then we're good.
Yes, I couldn't agree more. We now have the possibility for decentralization. It's not always a 10x over centralization. The way I distinguish those two is centralization makes sense for Pareto optimal outcomes by design. So
we're gonna have to define Pareto optimal for most
Arnold's
of our
got so many big
think.
words, and I'm just lost half the time. Please define.
It's like a game theoretic win-win. But the key is that if actors choose to behave differently, everyone is worse off. It is the optimal win-win. And when the other counterparty has a very strong incentive and is much worse off if they choose to behave differently in a trusted system, that's actually quite good. The tough part, I think, happens at the bargaining stage, where sort of you were alluding to, James. Everyone can sort of justify or rationalize that they're getting a little screwed. So like, hey, if I take a couple extra bips off the top, these guys don't understand how much I put it into like compliance, how hard I work. Like the nature of bargaining is that both parties either feel great. Most often, they both feel like they're making a compromise. So when one of those counterparties has asymmetric power, then it leads to these edge case scenarios where they maybe do a little bit more than they should. And with decentralized stuff, you can get rid of market externalities. And there are a lot of reasons for that, theoretically. But if you just want to look at what happens in the world, you can see those market externalities get dealt with from anything like a DEX aggregator like Jupiter to, really, that's one of my favorites. Maybe Bitcoin is another example, just like honesty between the nodes. But getting rid of those market externalities in a situation where the default is not Pareto optimal, that's where decentralization is so nice. My favorite sort of analogy for this is avoiding censorship. Like, this needs a better word because no one, censorship, who cares, right? Like, someone changes your words. It's the extreme versions of this which people care about. And it's not heavily implied by the usage of that word. A nation state shutting something down, that is the 10x of when something is decentralized. You're making a programmatic path where enforcement becomes increasingly physically impossible. That's, I guess, the TLDR. I think just because it can be decentralized doesn't mean it has to be or it should be. And in most cases, it shouldn't be. But there are a couple of really juicy improvements we can make.
Oh, absolutely. The thing that I hear a lot of people in blockchain say is that, we can put this on chain, we can do this and that on chain, where it's it's maybe a marginal improvement, or maybe even laying level playing field improvement, not actually an improvement, just laying playing field of, we've taken this tech stack, we put it on chain, and great, we use blockchain. It's there's no real added benefit or real reason, real usefulness of putting that specific thing on chain. People do this all the time. Like social networks, for example. Tons of people have tried to build blockchain-based social networks, and largely for the idea of censorship resistance, because they don't want their words changed, they don't want a nation state shutting them down, or whatever their reason is. But then it's you put a bunch of actual words on chain, on Solana, you're storing them in account state sort of situation. You have, state rent and whatnot. But then it's you don't really need any of that to be on chain. It's maybe a 1x improvement, maybe a 2x improvement on the existing product, the existing social network, where it's things like payments, where you can have, for some payments, I agree, for some payments, not all payments, it makes a lot of sense to use blockchain. But then for some really, really large ones, maybe you want those trusted portions, those revertible portions. Those are really important and really, really useful when you're doing really large transactions. But for the other side of remittance around the world, being able to convert one currency to another, be able to transmit value across borders, and being able to have less fees, have it go faster, things like that, where blockchain can and is a large improvement, potentially even a 10x improvement. That's when I think blockchain really, really shines, and more people and people need to explore more of what that looks like and how those work. But yeah, it's people try to put blockchain on everything, and I love blockchain, it's super cool, but most things that people try to slap a layer of blockchain on just make no sense to put blockchain, attach it to, other than for trying to get the blockchain marketing buzz sort of thing. It's the AI buzz right now,
Yeah, I couldn't agree more. And we've seen so many examples of that fail, even in the last cycle or the last two cycles. Something that you hinted at was this notion of, okay, remittances being a more accessible form of payment. If you indulge me, Part of why that's true is because KYC as a form of identification is foundationally led by a single or a subset of nation states. When you're screening someone for sanctions, who levied those sanctions? It's probably the US or a conglomerate within NATO. OFAC, exactly. And, as a disclaimer, these controls are probably a good thing. We probably don't want to facilitate, a lot of rogue nations or terrorists in their financing. But it cuts out so much of the world because, not everyone has access to documentation. Not everyone can prove, their KYC. And that's no fault of their own. Maybe they just come from a place where they never got a government ID, or they're so rurally based where they don't have papers to onboard onto like a Coinbase. It's in those instances where, for sure, remittances becomes quite powerful. But sort of like the backdrop for it is history. And I feel like that's a component that is missing in our industry because it's so fast. And it's like one of the best examples of
history. What do you mean by the backdrop is history?
Like human history. If you look at the 20th century, and let's go back even a couple of hundreds of years just to sort of encapsulate it. Within the context of payments, you have like the Spanish dollar as like the world's reserve currency. And this is because it was a great empire. And they had the soft power and hard power to back their dollar as the reserve. The United States uses the dollar because it was inherited by the Spanish dollar. Continuing this trend, you have Great Britain. This goes up until World War I, where they lose a lot of their soft and hard power. But the pound, for a brief amount of time, was also the world's reserve currency. Now we have the United States after World War II, after Bretton Woods, formation of the UN, and critically, the first true instance of globalization. That's a lot of Lindy. There are trillions of dollars of financial derivatives that are denominated in dollars. Commodities are denominated in dollars, like fundamentally valuable things. That's going to be really tough to unwind. And given that most of the world's debt is dollar denominated, another extension of this, it's really difficult for someone who is not born within the US, does not do trade with the US, has no fault of their own other than just being in a place which is either unfriendly to the US or is not very close to the US. They have a really difficult time turning on the lights locally. Example, Luigi in the Bahamas, 300,000 population, formerly colonized by Britain. And now their population is not of enough size where the current winners, I'll call them, the Stripes of the world, or, private equity funds, wealth managers want to do a lot of FDI into that nation because it doesn't have, compared to say like a Brazil or an Argentina or maybe parts of Africa or Southeast Asia, as much natural resources. There is more corruption, maybe, I don't know if I should say that on a podcast, in their like financial system and their legal system. The history is very opaque, and so it's not very attractive for returns. Korea was like this in the 70s, post-World War II, or really the Korean War, where everyone thought not going to make it. And Samsung and electronic hardware exporters now, over time, has made the nation a G15. These are like very long tail bets. But the default state is stagnation, wherein if you're a young, smart person from some parts of these world, or from some of these countries, the only way for you to get opportunity is to leave. And so the cycle continues. And I say history as the backdrop because it is precisely because of history that they are in stagnation, and where a permissionless value transfer system could turn on the lights for them. Because now you have not just, say, JP Morgan allocating based upon a 10-year discounted cash flow and a lot of knowledge about the legal and political situation in your country. You could instead just launch a product, a protocol, whatever, and receive global capital that can be dispersed into your local economy. I feel like Indonesia maybe India in like the last few cycles have been pretty key examples of this, wherein, that wealth that gets generated from anything from like NFTs or DeFi, that gets dispersed, proliferated locally in a way that would normally not happen. That's what I mean by history, and like blockchain being a proxy for this history. It's hard to like recognize because the space moves so quickly, and you have all these like feats of financial and just general engineering. But the reason why it's so crazy is because you have this historical backdrop, and whether it's a lost generation that has no path towards social mobility and needs to speculate in order to reasonably get out. That's so common around the world. The United States, this is now becoming a meme. Korea, it's a meme, which is why they love Aptos, APT. Various parts of South America. The bar for moving your social class is so hard. So why not spend YOLO it on a dog coin, where you're seeing the 10, 100x return that would change your life. So this, I promise, relates to payments. But yeah, it's an important context that I think goes underaddressed, because we now care deeply about like the philosophy of decentralization and yield, like modern day things more because of recency bias.
Arnold, I didn't know you were such the philosopher. like this is freaking
full on
awesome.
philosopher. I love it.
I do like. I'm not gonna lie. These are my favorite types of conversations. I could keep it on this level for the next 4 hours. We could just chat at like the philosophical level. However, because we have fixed time, I do want to bring it to the concrete just a little bit for some of our listeners who are like, okay, I just want to know more about like the day in, day out of Sphere, right? So that being said, it's like I have so much more trust in like your motivations, almost like kind of after everything that you've been talking about, which is dope. So it's like I think we all agree, we're all here because we agree that like this decentralized state machine that allows for programmable money in a sense is a potential solution for a lot of these things. Like we're in agreement there. But having a decentralized state machine that allows for certain things is not the same thing as those things being possible, right? It's like the Solana sort of relies on people like you and Luigi to build on top of it to sort of fully realize its potential. So let's talk Sphere payments for a little bit in like what you can do in the concrete sense of things. What is the biggest pain point that you try to attack?
Great question. And I promise that context was for a reason, because it's relevant here. Especially
I agree. I'm already seeing where it's relevant, but I'd love to hear it from you. So go for it.
Yeah, I'll start with the simplest ones. If you don't want to build a front end and it's kind of annoying, use our checkouts. If you don't want to have your own dedicated juke node and you deal with like hanged calls when there's network congestion, you don't want to deal with creating an SPL transfer wrapper contract that now needs to include extra metadata about how to classify the payments that you're getting. Who are they from? Not just a wallet address, but like this notion of a customer and for what type of product. That's why you would use Sphere. You already integrated Stripe, you have a fiat gateway, you want something really easy that you don't have to think about to now start accepting crypto payments, especially from international customers, use Sphere. You want recurring subscriptions without paying an escrow, pre-funding, use Sphere, because we have like availability for direct charge from wallet, delegated ATAs, as I think you did for a hackathon once. And
we tried, it never took off.
Very niche use case. But yeah, I would say like for most listeners probably, or for most crypto people probably, the gateway stuff is just like high EV because we're not going to charge a lot. It's very Stripe-like. There are SDKs, there are APIs, and it's just work that you would have to do yourself. You would have to reconcile yourself, and it's just like a headache. Why not save dev hours? Why not save audit costs? The fiat things, you would use us if you're maybe a Coinbase customer, and you realize that Coinbase is taking too much of spread on size, or you want to use USDC SPL, and Coinbase has restrictions on that now. Or you're from a country where they don't support Coinbase. It's really hard to get an account or Kraken or what have you. Maybe it's because of pressure from correspondents. That's when you would use us because we're going to give you an alternative route that is facilitated either by money transmitters, VASPs, or the end liquidity providers that'll get you institutional grade rates, but for size. Those are the main problems, I think.
Is your primary customer businesses then? Is the main target like a business that wants to accept crypto payments and handle their finances in a crypto based world?
Yes, in a crypto based world, precisely. If you're less Web3, it would be because you don't want to deal with central exchanges, OTCs. You don't want to train your employees to handle Web3 or deal with private key wallet management. A lot of shortcuts, and it's all presented on a very beautiful front end.
Awesome. Can you accept payments in fiat and have them land in USDC?
Yes.
You mean like an on-ramp?
Yes, but an on-ramp specifically specifically built for paying invoices or something like that, right? If I want my entire business treasury, if you will, to be on chain, but I still have customers who need to pay off chain, what does that look like for me?
It's exactly what you would expect from Web2. It's just the merchant gets crypto. So it's like paying from bank. So you could do a transfer, you could do a wire, and shows up as USDC because it'll get on-ramped to your wallet. The API structure is very similar to a normal bank transfer by design.
Nice.
There is support for cards.
Yeah, that's cool.
I would say though that cards are a headache. So we really like bank transfers.
Yeah, that's sweet. That is amazing, and it sounds like we're actually very close. Sounds like Sphere, it might even already be there, but if not, very close to creating what I've wanted for a while now, which is the ability to have all of my business financial management on chain. I tried a year and a half or so ago, and things just weren't there. I felt like I couldn't justify it. I just wanted everything to be on chain. And I couldn't swing it. There's just too many instances where I needed money in a bank account to do things, whatever. So it sounds like Sphere is at least half of the solution, if not more than that. It at very least handles my invoicing side of things. I also need to figure out the paying out side of things, which maybe Sphere does as well. Maybe you can answer that for me.
Yeah, for pre-made dashboard where you can just click buttons and do all that, can definitely do the first. The second requires a couple of extra button clicks that we're hoping to abstract in the next few months. If you are willing to use the API, you can do everything that you mentioned.
Amazing.
Yeah, focus is
I'm absolutely willing to use the API.
Convince a dev to use an API.
I prefer it. I'd love to automate everything. Why do something in 10 seconds if you can spend 10 hours automating it? Right? It's the developer way right there. Well, hey, we're at the tail end here. Is there anything else you want to tell our listeners before we wrap up?
I feel like my impression of Solfate, you guys have a lot of listeners that are really talented developers. I feel like, one of the best ways for us, at least, to help navigate the graveyard of ideas is to look at history. It might sound not very useful. And there's a bias towards recent stuff within our industry, different ecosystems, startups in general. Usually, if you're solving a fundamental problem, there's a very long history to us as humans, not in the grand scheme of things. A lot of the solutions that we use in the normal world weren't invented that long ago. I feel like if I had spent my first month or two in Sphere doing that research versus, trying to convince people to use a checkout page that they did not want, that would have saved me so much time. Because the alpha is usually outside of the bubble, outside of the groupthink. So whatever people are not doing, I would try to think about doing, or at least considering that. Don't do the opposite, because that's also silly.
I think that's awesome advice. That's very, advice. Very, very wise. Again, philosopher king over here. There's this like running joke that after every episode, I say in our intro that this is my new favorite person on Solana, and I think that's just a fact right now. Is that like you are my new
Arnold's
favorite person?
Always been one of my
Solana,
favorite
right?
people.
I'm mad that I'm saying this now because it just should have been evident 2 years ago or a year and a half ago. Breakpoint, Lisbon Breakpoint. But here we are. I'm fully appreciating finally, what you're offering to the ecosystem. And yeah, man, thank you so much for chatting with us. I feel like we just need to make this a regular thing. We just need to like have you on here and we can just like talk philosophical crypto once a month or something. Like that'd be dope.
I'm game.
I'm super game. I have a lot more material, and to your point, I think we could spend hours talking about the historical philosophical context. But really appreciate you guys inviting me. Been an admirer of both. So it's a little weird starting off the podcast for years now. And, very excited to see you guys on the TL in the future, and hope to be back soon. And sir, it means a lot that you guys, hosted this, and I hope at least one listener takes away something meaningful.
Oh, I think more than one. Honestly, like there's so many nuggets of wisdom from this, what you said. Great. So
nuggets.
Likewise, thank you so much. And to the listeners, we'll see you guys next time, but also stick around because we're going to have Arnold back. There's no doubt in my mind this is going to become like a regular occurrence.